So I did a video on 3M 3 months ago pretty much, and I recommended to stay away from the stock because a lot of the lawsuits and a lot of the things that were actually happening. And since then, 3M is down around 10%. It was somewhere around $110, $112, and now sitting pretty close to $100 per share. But a lot of things have changed since then, and the dividend is much, much higher. It's one of its highest ever. Now the dividend is around 6%. So there's a lot of rewards in terms of, holding 3M, but there's still a lot of risks. And in this video, I'm going to assess the risks around the dividends and around the certain lawsuits that 3M actually faced. I'm going to take a look at all the numbers, the debt profiles, the free cash flow profile, try to determine if 3M can even sustain the dividend while paying down all this debt. I'm going to talk all about that in today's video, so I really hope you enjoy it. Now, if we start on 3M and we take a look at their first lawsuit, this is the one we talked about before, there's still not a clear picture of how much it will actually cost them in terms of the earplug lawsuit with the veterans, which is pretty bad, and I hope things get better, but it's pretty bad for the company too. And if you look at a lot of the estimates, they're pretty much all over the place. No one knows what the outcome is going to be. They have around $14 billion of outcome. This is from Morgan Stanley, but they said the range of outcome is between $2 billion to $53 billion. So the range is wide, very, very wide. And it's pretty much, no one knows how much is it going to be. And there's a lot of uncertainty around 3M. But there's sadly another lawsuit that 3M actually faced, and it has to pay up $10.3 billion for the PFAS water pollution settlement, some kind of a water pollution that happened for, I think, in the United States, and I believe also in France and in Rome, something around 3M. I didn't read the details on what exactly happened. I was focusing more on the financials, but $10.3 billion, this is huge for where the company is actually trading, and they have to pay this amount over the next 12 years. So they have 12 years to pay the $10.3 billion, of lawsuits. And if you look at the numbers, I mean, the numbers are huge. And I'm going to actually post this, link in the description or in the comments below, so you could actually look at it yourself for your own analysis on 3M. But this is how much they have to pay pretty much every single year, over $2.8 billion in 2024, around 1.7 or $1.8 billion in 2025, 440 million in 2026, something like 1.8 billion in 2027. And this graph actually illustrates the picture much, much better. So they have to pay a lot of money every single year for the next 12 years related to this lawsuit. But 3M also has a lot of debt on its own for the company. They have around 800 million due in 2023, 1.1 billion due in 2024, 1.8 in 2025, 1.4 in 2026. They have in total over $14.8 billion of debt, not including this lawsuit of $10.3 billion, and not including the outcome that is pretty much unknown of the lawsuit of the earplugs, which could be anywhere between $2 billion to $53 billion. I mean, this is huge for a company like 3M, and sometimes you have these unexpected events happen in the market. I mean, if you look back at 3M a few years ago, it was loved. It was the best company ever. The dividend payer, it was pretty safe. Everyone pretty much loved and owned 3M, especially the dividend investor, which is why I would not be upset if I was you and you're down on your position. Because, I mean, you can't really predict when a company is going to get a lawsuit for something. Such things are very hard to predict, which is why you should not be upset of where, 3M is right now. It happened to tobacco companies. It happens to Johnson & Johnson. It happens, to a lot of other companies. Now, if we look at the free cash flow profile of 3M and in terms of how much in dividends they are actually paying out every single year, we can see the gap between the free cash flow and the dividend has actually narrowed because the free cash flow for 3M has been coming down a lot. And as of 2022, they collect $3.8 billion of free cash flow and they pay out $3.3 billion in dividends. So this is a very narrow range. But the good news actually is that a lot of the analysts are expecting, 2022 and 2023 to actually be the worst years for 3M in terms of free cash flow. And over 20 analysts are expecting between $4.8 billion to $5.2 billion of free cash flow between 2024 to 2025. So they are expecting $5 billion on average in terms of an improvement improvement in the free cash flow of 3M, which would put it back to even less where it was at in 2021. 3M was a free cash flow machine, but with all the debt that they will have, the free cash flow is going to be much, much lower. But just to make a basic calculation, we could take the $5 billion of average free cash flow that's expected, and we could take out 3.369 billion in terms of the dividends they pay out every single year. This would leave them with something around $1.6 billion of net free cash flow after paying out the dividend that they can use to pay down the debt. Now they have here 1.6 billion, as we talked about. And if we look at over here, they have around 2.8 billion due in 2024 for this alone. In 2025, they have around 1.7 billion. Over the next 2 years alone, they cannot manage this debt. And not even with the company's own debt, which they have around 1.1 due in 2024, and they have 1.8 due in 2025. There's no way 3M can manage the debt with the kind of net free cash flows that they're going to have of somewhere around 1.6 billion. In 2025, the payment alone for just the regular debt is 1.8 billion, and 3M is collecting 1.6, and they still have to pay the lawsuit in terms of what they have with the PFAS water pollution settlement, and they still have the earplug lawsuit, which we're actually not sure of how much it will cost. So in my personal opinion, the dividend cut for 3M is pretty much imminent. And it's sad that this is the way it's going to have to play out, but I'm just not seeing any way out. Now, there's a few scenarios where this might not happen. The first scenario is maybe they just refinance the debt to a later date. And if they have to refinance it in 2024 with the current credit profile of 3M and with current interest rate, the interest expense is going to be likely very, very high, which is going to affect the free cash flow even more. And even then, I believe they might have to cut the dividend in terms of 3M. Now, something else that could potentially play out, and we're not, again, sure of the outcome yet and how much they're going to get in terms of proceeds. But 3M is spinning out their healthcare unit, which accounted for 25% of the $35.3 billion worth of sales. But 3M will retain a 19.9%, so around a 20% stake. So they're selling out 80% of the healthcare unit. Now, this is going to benefit them because it's going to help them raise some money. We don't know how much money is going to help raise them, but they're likely, raise a decent amount from this spinoff. The second thing we don't know is how much debt they can load on this company. Maybe they can take some of the debt that 3M actually has and kind of push it on this company. That might actually happen. But the third variable that's very unknown is how much free cash flow is going to come out of 3M after they actually sell out 80% of the company. So there's a lot of confusions with a lot of the things that's happening. But in my opinion, the way I look at it, I can hardly imagine a scenario where 3M doesn't actually cut the dividend. And if you're a shareholder of 3M, if I was a shareholder of 3M, I would want 3M to cut the dividend, because debt repayment and reducing interest expense is going to deliver much more value to shareholders than actually, paying dividends, in my opinion. So yes, there could be some kind of scenarios where 3M doesn't cut the dividend, and I don't believe it's going to happen soon. But I just don't see how 3M is going to sustain this in 2025 and in 2026, and we still don't know how much it's going to cost for the earplugs, which is between $2 billion to $53 billion. This is massive, massive for the company. Now, if we look at where the company is trading at in terms of a PE ratio, 3M is trading around 11 times earnings. If you look at the history of the company since 2008, the lowest 3M has ever traded was around 9.5 times, and this was in the 2008 to the 2009 financial crisis, and now sitting at 11 times earnings, or 11.5 times forward earnings, which is, pretty cheap for 3M with a mean of 17 times, now sitting at 11 times. But there's a lot of risks with 3M. There's a risk on the dividend, there's a risk on the balance sheet, on the debt profile, on a lot of things. So for me personally, 3M is still not a buy at $100 per share. Yes, it could go up on a short squeeze. Yes, it could go much, much higher. But on fundamentals, yes, the company is cheap, but there's still a lot of unknown risks with the company. And for me, as I'm not not a shareholder of 3M. I would like to wait and see what the healthcare spin-off actually brings to the company. Could it bring an improvement, or could it bring, some kind of an improvement? I want to see what the healthcare spin-off is going to bring. Then I want to kind of get some kind of idea of how much this lawsuit is going to kind of cost. Is it 2 billion, 5 billion, 10 billion? And even if 3M goes up 10% after this news, at least I'm not going to be dealing with any unknowns around the company. I would know all the exact numbers of how much I'm gonna get from the healthcare spin-off, how much I'm gonna be fined from the lawsuits of the earplug. I'm gonna know all the number, and then I can have much more confidence if I want to buy 3M. But for me personally, even if I'm kind of late to the party, or if I wait until 3M goes up after we know a little bit more about those things, I don't think it's time to be a hero with 3M, and I'm personally not buying the company. But if you're a shareholder, I mean, it's a pretty tough situation at such prices. The company is undervalued, and I mean, it could go lower, but I don't know what to say. But for me personally, I'm not a shareholder, and I don't think 3M is a buy. I mean, if you have a very long-term horizon, I'm sure 3M can get over this and it could eventually rebound. But for me personally, looking at other opportunities in the market, I think there's better opportunities, elsewhere. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.